Well, good day, traders. Chris Weston here, Head of Research at Pepperstone. And once again, just taking you through what the sort of moves and shakers that we've been seeing through Asia today, how it's been reacting, and of course, a little bit of preparation for the US and European trading session as we go ahead. Setting the scene, we've had a very strong move recently in risk assets. That seems to have come into some headwinds. I'm surprised we're not down more than what we are at the moment, but volatility remains quite low. You've got the VIX below 13%. Implied volatility in FX markets is still shot to pieces. Have a look at this chart here. You can see, while I'm on the subject of implied volatility, the Kiwi dollar has got a 1 week implied volatility of 8%. But you go down to euro, crikey, it lacks any kind of pulse at the moment, just above 4%. You know, if you look at 1 week vols, they're very, very low at the moment. The market's very calm. They're not expecting big moves over the coming week. And certainly that's something we are watching very closely. But we have seen markets looking pretty good. And I think, the news flow over the last sort of 12 hours or so is that we are looking for a pretty chaotic and event-ridden December. There had been some talk in Reuters, whether that comes to fruition is yet to be seen, but that seems to be sort of growing now. The meeting that was supposed to take place between President Xi and Trump is now going to be pushed back to December. There has been talk that potentially could take place after the NATO summit, which is on the 3rd and 4th of December, and that takes place just after just going before what we've seen in the UK election, which obviously takes place on the 12th of December. So certainly, we've seen a bit of fragility kick into markets. It's interesting as well that we have seen a bit of buying coming back into the bond markets. Bonds have sold off pretty sharply. You've seen a steepening of the 3-month, 10-year curve, pretty aggressive actually, to be honest. And you're seeing a little bit of people looking to fade that steepening, a bit of money coming back into the bond market there. And that's something we are closely watching, certainly for dollar yen traders. You can have a look down at the FX markets at the moment. You can see dollar yen 108.82. We've been looking for that breakout yesterday above 109. That hasn't happened. We saw a failed level to hold again, and the sellers have come in just because we've seen the bond market rolling over. That's something we are watching as we go through the session ahead. And there's not a lot of economic data to really focus on in the session ahead. In the US, you've got jobless claims. I really don't expect them to cause too much of a move. If you have a look at what's happening in sterling or cable at the moment, 128.47, down 8 points or so. We're continuing to hold this 127.89 was the 24th of October low. So it's just prices rolling over a touch. Obviously we've got the Bank of England meeting later on today. I don't expect that necessarily to be a volatility event. Implied volatility overnight, we looked at 1 week a minute ago, but overnight implied volatility in cable is still very subdued. If you look at that on the straddle, the overnight straddle is costing about 65 points. So the implied move over the session, over the coming 24 hours or so, is around 65 points in cable, not particularly fireworks. So the Bank of England, in the eyes of the market, is very much going to be a non-volatility event. It's not necessarily something that you should be too concerned about holding positioning over, but of course, something that could pose an event risk. So do look at your positions when we go through that meeting there as well. But we are looking at the polls as the bigger driver of what's happening in the pound. There was a poll overnight by YouGov for Sky News suggesting that the Tory party have got 36% of the votes, Labour 25%. You've got Lib Dems, who I think you need to watch very closely through this situation. Obviously being a staunch Remain party, revoking Article 50, they got 17%, and also the Brexit party of 11%. I think the fact that we have probably pared back the idea that the Tory party are going to get a firm majority, at least in the eyes of the betting markets, has seen cable coming under a little bit of pressure, the uncertainty that portrays, and we are seeing cable looking to roll over a little bit in that situation there. I think dollar CNH is one to definitely watch. We saw that spike up a little bit on these headlines that the meeting between Trump and Xi is going to get pushed back to December, potentially after the NATO summit. So a little bit of weakness creeping into dollar CNH, and of course that weakness that we've been seeing, strength into dollar CNH, and that weakness we've been seeing in the CNH resonating with a slightly weaker Australian dollar. Now there hasn't been much data to focus on today. We saw Aussie trade balance numbers. Market doesn't see that too much of a volatility event, and that was a good number for Australia. We saw that trade surplus coming at just over $7 billion. In terms of what we've been seeing in equity markets, because of course that's where we've been seeing the major moves of late, they're giving a bit of kickback. That uncertainty from trade is causing a few sellers to kick back in. You can see our opening calls for Germany and the UK down 8 and 9 points respectively. If Wall Street was to open right now, it'd be down 42 points. Asian markets a little bit mixed. It's the ASX 200, which is looking good at this stage, up 37, getting into the sort of top echelons of the trading range. If we can get up into 67, 75, I'll be a pretty willing seller into that perspective there, but that's got some stretch to go. But the bank's putting in a lot of points locally, and that's quite an interesting concept in itself. So a fairly quiet day on the markets, and that providing, everyone's really focused on what's happening between US and China trade. I keep saying it time and time again, but it now looks like we're potentially going to see a summit taking place in December as opposed to November.